Hi everyone, welcome back to Be Rich. I know some of you are missing Anand, but what to do? Anand is busy today. So me and Kesar thought we'll continue with Anand's book. Some of you feel that I bought the book, now you're talking about the book. What is the point buying the book? I still think reading the book is the best thing to do. Best way to retain knowledge is by reading, and reading over and over again helps a lot. It helps you remember things. The reason why I'm doing this is I'm trying to make case of read the book. He has a hesitancy because of strength of language. I'm trying to coach him into it, telling him there's nothing to worry about, that he has enough language skills that he'll be able to comprehend this book and be able to understand it. And I thought it would be interesting to bring you guys along with this journey and share it with you. I do realize this book is very basic for most of you who watch this program, because a lot of you talk about macroeconomics and what's happening globally and specific shares. Yes, that does happen with Anand. But with Kesav and me, we tend to discuss very basic things. So this is again an explainer video. So if this is too boring for you, I do understand. Maybe you can wait till Anand returns. And those of you who are beginners like me and Kesav, welcome back. What do you say, Kesav?
Yeah, sir. I already made a playlist called Book Series with the name of this book. The video we posted doing the review of the book got really nice. Less views, but more comments are on a positive way. We like to see even more episode like this. They are listening to it. I'm so happy. I'm also learning with them, sir.
I agree. And by rereading this book again, Anand's book, I'm also learning a lot of things which I'd forgotten, and you tend to remember them. It's like mathematics. The more you practice, the better you become in it.
Yeah, sir.
Yeah. So today we'll dive in further. Basically, last time we spoke about what is a share, what is the share market, what are types of investors.
Index, sir.
Yes.
We finished with index.
Yeah. And we spoke about how indexing is done in the stock market,
Yeah, sir.
NSE and BSE. So now we talk about now the stock market is there, how do we do the share trading?
Okay.
So in monetary money related things, we have banks. Where you have a bank and you open a bank account and you put your money in the bank and take the money from the bank. Same way, in share market, we have something known as depositories. Depositories are banks for share market. That's all.
Bank for share market.
Yeah.
Okay.
Like how you have bank to keep your money. You need some place to keep your shares.
Okay.
Understood? So to keep your shares, you have depositories. And in India nowadays, everything is done electronically. Way back, Anand tells you in many videos, Anand told you, way long time ago, shares were traded with physical paper.
Yeah, sir. Small papers.
Yes. Those were called share certificates.
Okay.
And those share certificates would typically take 1 month to transfer. Because the guy, let's say you're sitting here in Chennai, the guy you're buying the share from is sitting in Delhi or Bombay, and over the phone you do this share trading. This is your broker, common broker. Your broker will talk to his broker and agree on a price. Then the money is sent by a check and everything is done and the money is transferred. All the deal is done. Then the guy will send the share certificate to his broker will send. So this whole process
takes
then
1 month.
Yes, 1 month, and then it has to be registered. Your name will be added.
Okay.
In the list. The back side of the share certificate, it will be like the horoscope of the share certificate. Who all owned it, when it was transferred, to whom it was transferred, it will be written. And they'll write case of the current owner. So like Anand says in the book, this meant a lot of shares were lost and meant it was a complicated process. And what happened is, like how we had stamp paper scam, remember? I don't know if you were old enough to remember stamp paper scam, where stamp papers were used and they were not electronic. So people were forging stamp papers. So share certificates were forged.
Okay.
Like degree certificates forging, share certificates were being forged.
Sir, this is the same thing that happened when they first opened the World Bank, sir.
Correct.
I can remember that,
Yeah.
sir.
So this happened. Lots of share certificates were being forged.
Okay.
And verifying it. This led to the 1991-92 scam. That scam, what happened was lots of fake share certificates were floating. So we do not know if you're buying the real share certificate or you're buying fake share certificate. Because like currency, it's like note.
Whether we don't know the company is there or not.
No, not there. And you do not know if this share certificate is issued by the company.
Oh, okay.
So all this problem happened. All of this was removed when we became electronic.
Okay.
When we started electronically buying shares and selling shares, all this physical share problem disappeared. And the speed improved. Because of computers and internet, speed improved. And like we discussed in that video or opening the account, you have 2 shared depositories, main depositories. 2 bank accounts you can have it. One is the NSDL, National Security Depository Limited.
Okay.
The other is CDSL, Central Depository Services. So all brokers will either work with one of them or both of them.
Okay.
So you can open like Chola, when you can open a demat account. You can either open it in this one or that one. You can choose.
Okay.
Right. And for this, maintaining this account for you, this is what the brokers charge a year nominal fee.
Okay, brokerage.
Not brokerage. This is maintenance to maintain this account for you. Chola is opening this account in NSDSL or CDSL, no?
So that is called AMC, annual maintenance.
Yeah, they'll be charging a small amount.
Okay.
To handle this.
Okay, sir.
And they'll give you a set of things known as delivery instruction slips. When you open the account, it'll be like a white book with like check leaves in it. And those are very important. You should always hang on to that.
Okay.
Because let's say you are selling some security. You have some shares and you want to sell it. They might ask you to fill that.
Check.
Yeah, it's like their counter slip. Their proof that you wanted to sell it.
Okay. They want it in a return.
Yeah. So when finally the shares are being sent out of your account or whatever, they'll ask you to fill out that and hand it back to them. Like a check leaf. So they also have written record. So if ever their question saying, Keshav is saying he didn't ask you to sell it, or he didn't ask you to transfer that share. Why did you transfer that share?
Then they will say Keshav was the one who returned this.
Yeah,
okay.
They'll prove it. They have it. So these checks and balances are there to make sure there's no misuse happening.
Okay.
Okay. And what Anand advises you is, as an investor, you must regularly check your account. Like how you keep checking your bank balance. You make sure your bank balance is correct.
Yeah, sir.
Right? You look at your phone SMS. It says like that, you must regularly check your DP account, your depository account with your broker, and make sure you are not being misused. Your shares in that account are not being misused.
Okay.
Because your broker has access to your account. Like how your bank has access to your account. Right? Your bank might take your funds and play around with it. You have to make sure, right? There are rules to regulate it. Same way there are rules to regulate. But you also has a responsibility is also on you to make sure you're not being misused.
Okay. So, but some of the followers of Anand sir are like this. When you buy a share, we have to put it in the account, and we don't have to see it for another 2 months or 3 months. That will grow. We don't have to see that regularly. They will think about that. Let you clarify them, sir. We have to check.
You trust your broker.
Okay.
You trust the system. That's your choice.
Okay. Understood.
Okay. You put an undi and you say it's safe in my undi. That's your choice.
Okay.
Anand says it's good to now and then make sure the undi is locked.
Okay, sir.
You understand?
Understood, sir. Understood, sir.
So no one else is pilfering, doing anything in your activity.
Okay.
Okay.
Understood, sir.
Right. So then the question comes: what is a broker? So now the broker, I told you, Chola is a broker who opens an account in the depository for you.
Okay. Sir.
So what does the broker do?
The broker will help us to buy and sell stocks.
Correct.
Okay.
The broker's job is, you want to buy or you want to sell, is to find you the correct person who also wants to buy, sell, and match you guys.
Okay.
Okay. So that is the job of the broker. The broker is the guy who fixes the deal.
Okay.
He brokers the deal between both of you. Okay. And he does things like called portfolio management. Okay. And they manage your money in behalf of you.
Okay.
Okay. Investors' money. If you are high net worth, they'll say, we'll manage your money for you. We'll tell you how you should allocate your funds.
Okay.
All this they'll offer. Anand says, don't do any of that.
Okay.
Okay, because that's where broker makes his money. A broker makes money. The more he makes you buy and sell, the more the broker makes commission.
Okay.
Let's say, for example, I explain house broker for you. You're a house broker. The more the person is selling and buying the market, the more you make commission. You make the commission from the buyer and you're making the commission from the seller. So you want people to sell, buy and sell more. If people don't buy and sell, where will you make the money as a real estate broker?
I have to make them buy and sell.
So you always be encouraging. People who have empty land, you'll be encouraging to sell it. Say, why don't you do joint development? As a broker, when you see you're sitting in the barber shop drinking chai, some young software guys come for a haircut, you'll say, oh, you're a new fellow to this town, you need a house, you want to rent. You're always trying to push. If he says, no, I'm staying here, you'll be like, no, but I know a better place. Maybe you like here, more of your friends stay from that company are staying there. So you're always thinking.
How to make money.
encouraging the guy to take the deal.
Understood, sir.
Understood?
That's what broker does.
Correct. And even to the fact, if you have a house
Okay.
and a broker finds a good tenant for you, when the tenant leaves, you'll always remember the old broker. You'll call him back and say, hey, you found me a good tenant. Can you find me one more guy?
Okay. He becomes regular customer.
That is what a broker's job is. So Anand says this is also true in stock market. So a stock market broker wants you to constantly keep churning.
Okay.
Churning means turning your shares, selling shares, buying. The more you trade, the more money he makes, more commission is making.
Okay.
The more in and out is going, everywhere he keeps making 2 rupees, 3 rupees off you.
Okay. Understood.
So he'll always encourage you to do it. And that's why he'll always be an advisor for you. And he'll keep on sending you those messages. He'll tell you, buy ITC, target ITC for a certain price.
Okay.
Exit at this price.
Okay. For this, he make a commission.
Correct.
Okay.
So that's why if you follow those things, always remember the recommendation is where the broker is making money. So if a broker is recommending something, that is because there is a reason behind it is he is making money on that deal.
Okay.
So don't listen to this.
Understood, sir.
As a value investor, as someone who's doing long-term investing, the broker has no role for you. The only job for Chola is to help you open your account.
Okay.
And to help you buy. That's it. He's not there to tell you to advise. He doesn't have your future in his mind.
Okay.
What is in his mind is to make money.
How to make money.
He's doing this in the business. So remember, that is what Anand says.
Okay, sir.
So always avoid brokers' recommendations.
Okay.
So he says, for an intelligent investor, broker is only an intermediary through whom one buys and sells shares in the stock market. He will definitely not be an investment guru. The broker is not an investment guru who will make money for the investor. He's not Warren Buffett.
Okay. He's just a mediator between the person who is buying and the person who is going to sell. Okay, sir.
Like how you will not take stock advice from the chai wala, okay, in a tea stall.
Okay.
Same way, don't take advice from your broker. The broker and tea wala, auto rickshaw driver are the same. They got nothing to gain. You got nothing to gain. They got money to make off your back. Correct. Now we'll talk about some other things in the share market.
Okay, sir.
One is you can buy a share.
Okay.
You hold and use it. Do you know what bonuses are?
Bonuses? I don't know, sir.
Good. I'm proud of you.
Thank you, sir.
In your salary, what is the bonus?
If I do something, if I achieve something in my work, they will give me a bonus, sir.
Wrong. That's incentive.
Early, it's an increment.
That's incentive. If you do something, you're getting increment. Or you get, increment is everyone gets. What you're saying is you achieve a target, you get incentive.
Okay.
What is bonus?
Early. I don't know, sir.
What does the word bonus mean, man?
Extra.
Correct.
Okay.
What is extra usually?
It's more than my increment or my salary.
What's the cost of extra?
What's the cost of extra? Sir, let's think if my salary is 20,000, if they give me 23,000, the 3,000 is a
getting
bonus
confused
for
with
me.
salary. Let's say you're buying one samosa and he's giving you a bonus samosa. What is that?
Free.
Habba. I reeled you in.
Okay,
You got lost.
Okay, sir.
Okay,
Now I got
bonus
it,
is
sir. Free.
free money.
Okay.
When you get bonus, the company is giving you bonus. That bonus is
Free. Understood, sir.
everybody gets that bonus.
Ah,
Even the joker who was sitting next to you, who didn't do any work, who was sitting there techifying the bench.
he also gets a bonus. Okay.
Incentive he won't get.
But
But bonus,
he will get.
he'll get.
Okay.
So companies give something called bonus issues.
Okay.
Okay. One way a shareholder makes profit is issuance of bonus shares. Bonus shares are issued free of cost to existing shareholders. Okay. That means if you already have a company share, if ITC is giving bonus, you also get bonus share.
Okay.
Who decides the bonus share? The company, board of directors of the company, the people who are running the company, they decide. Let's issue bonus. Then they'll send a vote to all the shareholders. You get to vote. Yes, we want bonus.
Okay.
And bonus share is issued. That share is, cost of that share is how is it paid for is the company has surplus in its money. The reserves of the company, the account,
Okay.
right? The cash, the fulus. The company has a lot of money. Like Apple, has a lot of money. They decide to give bonus.
Okay.
Those shares are paid by the company from the reserves.
Okay.
That's how it's adjusted, right?
Okay, sir.
And the advantage in what is the bonus? When you get bonus shares, it's free cash for the shareholder.
Okay.
How do you get free cash? You sell it if you want to. Let's say you have 100 ITC shares
Understood,
and I
sir.
give you a bonus 1:1. You get one share
Ah.
extra free. So now suddenly you have 200 shares.
200 shares. If I sell that
Out of the
extra
200, you sell
shares,
100,
it's extra free money for me.
free money
Okay,
for
okay.
you. Or you can hold on to it.
Understood, sir.
Understood?
Understood, sir.
That is one way investors make money in share market.
Okay.
Is bonus issues.
Ah.
Companies which are famous for giving bonus issues, Wipro, Infosys, L&T and ITC.
Okay, sir.
They're famous for always giving bonus.
Bonuses.
1:1 bonus I told you about. That is 1 share to 1. One is 1:2 is also there. That means for every 2 shares you have, you
have
get
one
1.
share.
So if you have 100 ITC shares and they're giving 1:2, how many will you get?
150.
There. If you have 100 shares,
Yeah, sir.
they're giving 1:2. So how many extra shares will you get?
For 2 shares, I will get 1 share. Right, sir?
So if you have 100, you will get extra
50.
Correct. You added it up and you said 150.
Oh, sorry, sir.
Yes.
50 shares.
50.
150.
Yeah.
Total.
You added it up.
Sorry,
So
sir. 50 shares. I will get free 50 shares.
Extra 50 shares.
Extra 50 shares.
Okay.
Okay, sir.
But what happens to the share price when suddenly you get bonus?
Share price will be...
Inflation. Let's talk about inflation, right? 10 people are after this camera.
Okay.
Right? It's 1,000 rupees. Suddenly, let's say 20 cameras come in the market and everybody can buy a camera. What happened to the price of the camera?
Suddenly the price drops.
Correct.
Crashed.
Same thing will happen when you issue bonus shares. What will happen to the share price?
Okay. Fall.
Correct. Because suddenly there's lots of
shares
available.
Okay.
Because bonus is issued. So Anand says the stock price will immediately fall. Right? Because supply of shares is increased. But over a period of long term, the bonus shares will be absorbed by the market. The price will slowly go back to where it was.
Okay.
So let's say ITC is 100 rupees. They issue bonus shares 1:1. Tapak, it falls down to 50.
Okay.
Slowly, it will take some time. It will come from 50 back to
its position,
which was 100.
100.
So you always, when you get bonus, you should not immediately sell it. You should wait.
Hold on to it.
Hold on to it.
Okay, sir.
If you're a long-term investor and you have bonus given to you, you should hold it.
Okay.
So as a value investor, you should look at companies which is a plus is if the company is giving you bonus. So when you're evaluating your small cap, large cap, medium cap,
okay,
you should see the history of the bonus being issued.
Okay, sir.
Let's say they're regularly issuing every 5 years, 3 years, they're giving bonus shares. It's a good company to invest because whatever initially you're putting, it's doubling, it's tripling. Without you doing anything.
Free. Extra.
For free.
Okay. Understood, sir.
So it's good. It's like suddenly the bank doubles your deposit. Imagine every 3 years your bank, whatever is the account is there in your money in your account, your bank just doubles it. You'll feel very good and you'll leave more money in that bank.
Yeah, sir. True.
Same thing.
Okay.
So that is something to look at,
to
analyze when you think of buying a company. Does it issue bonus shares?
Okay, sir.
That is why reading the history of the company is important.
Okay. Doing research. Okay, sir.
Understood?
Understood, sir.
Okay. Now there is something known as rights. What are rights? Why do companies use rights? Have you heard this rights issues?
No, sir. Rights means RIGHTS. This is like a...
What is your right? When I say case of this is your right, what is it?
What is my right? I have the right to do videos.
Correct.
Then...
Correct. So rights issues that.
Okay, sir.
Company needs to raise money.
Okay.
Case of medical shop needs to raise money. Got a new project. So one of the ways you raise money is you issue new shares to existing customers, existing shareholders.
Okay.
So existing shareholders, you give them new shares, offer a new share to them, okay, which will be discounted.
Okay.
Let's say ITC is trading at 100. They issue rights to you saying 50 rupees a share I'm going to give you.
Okay.
You can buy it.
Yeah, sir.
And the shareholder is giving you to a discount. You'll be like, yes, I'll take.
Oh, one share.
What does the company get? Company gets cash for a new project.
Okay.
Here you're rewarding the shareholder plus you're creating cash.
Okay.
It's the difference between a bonus and this. Bonus is free.
Sir, but I have a small doubt. If ITC issues a share for 50 rupees, but the real price is 100, it's a loss for them, sir.
How? He's creating his own currency. No, it's like you printing case of currency. You're printing case of rupees and you're selling it in the market. The company is printing more shares. He's selling it to you. He's rewarding you as a shareholder. And you as a shareholder will take the 50 rupee, and if you want, you can go to the market and sell it for
100. Oh, now I understood, sir. Nice one, sir.
right. So this is another way. The company gets what it wants. It needs some quick money for a new project. It's getting. This way, the shareholder also feels happy because the shareholder is getting shares at a discount. Because at the end of the day, the company has to keep the shareholder happy. Why do you have to keep the shareholder happy?
Then only we will invest on that.
You're the owner,
Okay. Yeah, shareholders are also the owners of the company.
Not also, they are the owners.
They are the owners of the company. Okay.
Understood? So the board of directors will always want to keep the owners of the company happy. The owners get upset, then we have a problem, no?
Yeah, sir. They will.
That's why they say Facebook laid off 11,000 people. They laid off 15,000 people for the shareholder pressure. When they say shareholder pressure, who's the shareholders?
We.
Yeah. The people who have Facebook shares are saying, Zuckerberg, you're losing money, man.
You need to
do something. Stop losing money.
Understood, sir. That's why Okay.
That's the shareholder. So, rights issue is that. Rights issue is they give you a discount. And some of them can be made into convertible bonds. So, what he says is, it's like a bond. You know what a bond is, right? You're getting interest. Same way they give you, it's a bond certificate where they're giving you fixed interest. Later on a specific date, it can be converted to shares. At a certain price, which is also an advantage for the shareholder. Instead of giving you shares at a discount, he's giving you interest. You have to buy it. You put money. He's giving you interest. And on a later date, you will convert that into shares at a certain price, agreed price, pre-agreed price. So let's say I'm selling ITC sells you a bond for 10 rupees. Then says after 5 years, the 10 rupee bond will be converted into shares for 2 rupees each share, I'll give you 100 shares at a discount. So you believe in the company. As a shareholder, you believe. You're the owner. You believe in it. You know it's going to grow. The share price will grow. You're getting interest for the money you're putting in. Bond interest you're getting. Plus, tomorrow, instead of getting the bond, you'll get shares at a discount price. So it's a win-win.
Understood, sir.
You understood? The maths behind it. Or shall I explain it in simple maths?
Let's get in simple maths, sir.
Okay.
I understood, but
he's selling you bond certificate.
Sir.
The share is trading at 100 rupees, right?
Sir.
And he's saying, Kesav, I'm selling you a bond certificate for 10 rupees. You buy the bond certificate. He's saying every year I'll give you interest, 10% interest, which is 1 rupee. After 5 years, this bond will convert into shares. I'll give you 10 shares. Okay,
sir.
At 50 rupees.
10 shares at 50 rupees.
Yeah. No, it'll be 10 shares at 1 rupee, sorry. Because I'm only taking 10 rupee bond, no? So it'll be 10 shares at 1 rupee. 5 years from now. Right now the share is trading at 100 rupees. Right? So 5 years from now, you're going to get ITC shares, 10 more shares at 1 rupee each share. ITC is 100 rupees, right? He's selling you bond for 10 rupee bond. And he's paying you interest 1 rupee per year.
Sir.
Okay. After 5 years, this bond converts into 10 shares. Okay.
Sir.
Right. So ITC is trading at 100 rupees.
100 rupees.
He's selling a bond.
At
Each
10
bond
rupees.
is 10 rupees. And he'll pay you 1 rupee interest per year. For 5 years. After 5 years, this 10 rupees which he owes you, instead of giving you 10 rupees back, he'll give you 10 shares. He doesn't return 10 rupees to you. He'll give you 10 shares.
If I buy the bond at 10 rupees, that is like a deposit
Correct.
amount.
You put deposit. But after the deposit, usually get your money back.
But
here the money, he gives you shares.
Understood, sir. Understood.
So imagine 5 years from now, 100 rupee ITC might be trading at 200. And you're getting 10 shares.
10 shares.
So 10 into 200, 2000. Your 10 rupees will become this.
2000.
Plus you've got interest.
5 years means 5 rupees.
This is called the convertible bond.
Sir. Understood, sir. Now understood.
Understood? So there's another way of raising cash. Where the company sells you the bond, saying this bond is convertible into
shares.
So you as an investor, shareholder, you can decide. I'll subscribe to this bond. Right?
Sir.
So this is what convertible bonds rights issue is. Now another way a company can raise is, without coming to the shareholder, is it can do something known as foreign currency convertible bonds. Issue of warrants to the promoter. The promoter, the main shareholder, the guy who started the company, he can inject more money into the company by taking more shares. and foreign currency exchangeable bonds. These three things I think we'll talk next video because they've already run into 25 minutes.
Okay, sir.
Okay, so far we have discussed rights issue, bond issue,
Bonds.
and we spoke about brokers and we spoke about depositories.
Yeah, sir.
You understood everything today?
Yeah, sir.
Any questions you have?
No, sir. This is the one which made me go.
Do some mental arithmetics.
Yeah, sir.
I think you should put this on the screen.
We'll do that, sir. I will show this
So
on
people
screen,
understand.
Sir. Okay, sir.
So people who also struggle to visualize it can visualize what we are talking about.
Okay, sir.
Label it and put it off.
Okay, sir.
All right. So thanks, guys. We did part 2 of our video into Anand's book. I hope you guys found it interesting, and the different ways the money can be made by as a value investor in a company, how bonds are issued to shareholders, how rights are issued to shareholders, how convertible bond into equity happens. I hope Keshav found some value in this. These are things you can look into when you're investing into a company. See the track record and the history of the company, especially if it's a large cap with a long history. You can see how have they been issuing bonuses, have they been issuing rights, and what are the benefits of it. Because as a shareholder, I've told you how you put your money and this doubles for free. How this
Bonus.
creates cash for you for free.
Understood.
So these kind of things are interesting ways companies raise money, and also as a shareholder, you're given rewards.
Understood.
More than next time also we'll talk about dividends. We haven't spoken about dividends also.
Yeah, sir.
That's also another important thing.
Okay, sir.
What are
In the
dividends?
next video.
Okay,
Next video we will talk about it.
dividends.
Today I hope you guys learned something. If the ones who is seeing this video want to see the previous video, it will be on the end screen. Wait for the end screen to complete. Previous video will pop up on that, so you can see the first video of our book series there. So thank you for watching. Be Rich. If you like this video, like, share and subscribe, and hit the bell icon. If you didn't hit the bell icon, you will not get notified whenever we post a video. Thank you for watching. Be Rich.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.